Hi, everyone. Thanks for coming. I'll take you through, this is our forward-looking statements. It's on our website. I will be making forward-looking statements throughout this presentation. So Nemaska, for those of you who aren't aware, we are a lithium near-term producer. We are actually building our project right now. It's under construction. So we have a mine as well as an electrochemical plant. Both facilities are located within the province of Quebec. So we are vertically integrated, and that will be going from the mine all the way through to the processed chemical. Lithium salts, and so it would be lithium hydroxide as well as lithium carbonate. We do have 4 offtake agreements for our lithium salts products. So we have offtakes with Johnson Matthey, FMC, LG Chemicals, as well as Northvolt. So and those 4 offtakes represent about 70-75% of our total production, and that's multi-year offtake agreements. And they start once we start production, and they're for the first 4 to 5 years of our production. In terms of investors, we have 2 very large strategic investors, one being the government of Quebec, who owns approximately 14% of Nemaska, so they're an investor. So they participated in the equity as well as the debt financing that we recently did. And then we have SoftBank Group out of Japan. SoftBank's a very large, I think they're the 4th largest company in Japan, and they invest in the Internet of Things. This is their first investment in the lithium space, and they're obviously very interested in the whole electric vehicle angle. We have been producing lithium hydroxide from our phase 1 plant since 2017. So we did a bulk sample, and we did start producing hydroxide. We've delivered about 50 tons. All of it is battery grade, and all of it has gone to Johnson Matthey at this point. Starting this year, we'll start delivering monohydrate, so a lithium hydroxide monohydrate, to other customers outside of Johnson Matthey. And the first obviously would be our 4 offtake partners. Project financing. So we just closed in June, we closed a project financing of 1.1 billion Canadian. And so we did this using a number of different instruments. We did 454 million in equity. That was 2 private placements, one with SoftBank and one with Resources Quebec. And then we did a public offering of 280 million. That was a bought deal led by BMO as well as National Bank out of Canada. We did a stream. So we did a $150 million stream with Orion Resource Partners, that was US, and we did $350 million in senior secured bonds. So they list on the Norwegian exchange, and they have a coupon of 11.25%, they're 5-year bonds. Use of proceeds there, you can see our project financing takes up the bulk of our proceeds with $800 million being allocated to that. We do also have working capital in there, about a year's worth of working capital, as well as a cost overrun account, which would be 40 million roughly Canadian for a cost overrun account. So that would be in addition to the contingency budget, which is already built into the project financing number. So quickly to orient you, we are in Quebec, so the mine will be up in Nemaska, and it will be, it's located at the top of the map there. We'll mine and crush and concentrate, so we'll ship about 200,000 tons of concentrate a year down to Shawinigan. So Shawinigan is down on closer to the St. Lawrence Seaway. In Shawinigan is where we'll process the concentrate into lithium hydroxide and lithium carbonate. And our total production out of Shawinigan should be about 33,000 tons LCE, so that would be lithium carbonate equivalent. This is our up at the mine site. I've got some pictures here just to show you project construction. So this is the face of the ore body. This is where we did our bulk sample last winter. And this ore body runs for about 1.2, 1.3 kilometers. And at its widest, it's about 85 meters in thickness. So it's actually a significant size ore body, very easy to mine. It actually outcrops a fair bit, 40 meters high. So the first 5 years, you're actually leveling off a mountain, so you're in a quarry. So it's very low-cost mining initially. Then you move to an open pit and finally underground. This picture was taken a couple of weeks ago, up at the mine site. So we are in construction despite the fact that it is winter. And we're not anticipating any delays because of winter. I put this picture up just to be able to show you, it is a very compact mine site, and we have done a lot of work to keep the footprint tight. At the top end there is where the mine will be, the actual open pit. The blue building down here is the concentrator. Just to give you an idea of what's up so far. So the administrative offices are in. The concentrator is up, the blue building there. We've got, we've started pouring a lot of foundations for the primary crusher, the secondary crusher, the electrical substructure that's going to be powering the crusher section of the mine, as well as the concentrate dome. So there's been quite a bit of activity up at the mine site. This is inside the concentrator. So the concrete has been poured, the electrical work, the trays are all in, ventilation is in, overhead crane is in. So there's quite a bit of work. The concentrator is pretty well ready now to start receiving the main equipment, which we're going to be expecting over the next few months. This is the retaining wall. The top there is the retaining wall where the primary crusher will be located. And then at the bottom there is where we're going to be locating the processed water tank. So we're recycling about 86% of our water will be recycled. So this is the water tank outside the concentrator. That's the foundation. And then the thickener is there as well, foundation. And then on the other side is where we'll be installing the electrical building, again, for the crusher circuit. This is Shawinigan. So Shawinigan was a facility that we bought from the city of Shawinigan. It's $2 million. We paid for this structure. The city of Shawinigan basically emptied all of the pulp and paper mill equipment that was in this facility prior to us owning it. So they've cleared it out, and they've cleared out any of the buildings on the property that are not being used by Nemaska. As you can see, the hydroelectric is not going to be a problem. It's right next door, the dam, so there's lots of power to draw down there. And we are using an electrochemical process, and so our main reagent is electricity, which in Quebec is 3 cents US a kilowatt hour. So that's your long-term power purchase agreement in Quebec. And that's pretty well standard that's the industrial rate for hydro there. And this is inside. So we had a group of about 35, 36 investors at Shawinigan and up at the mine site. I would say it was probably about 3 weeks ago now. On this side, you can see that's inside the phase 1 plant. And the phase 1 plant is the smaller facility that we've been running since 2017. And then on the other side of the screen is the commercial facility. So most of the work that's been done there is really on the civil works and just preparing the building to receive the long lead items. So all of the equipment for the Shawinigan plant all the long lead items have been ordered, as well all the long lead items have been ordered for the mine. This is our schedule. So construction at the mine is scheduled to be complete Q2 2019, handoff to operations, and then ramping up with the initial concentrate coming out of the mine in Q4. We do have a 1-year contract for that concentrate because the chemical plant won't be ready to start processing. So we'll be shipping it to a group out of China, and that contract is already in place. And then in 2020, Q2, Q3, we'll be handing it over from construction to operations. And we should start producing lithium salts, so that would be lithium hydroxide or carbonate, out of the chemical plant in Q4 2020. Where are we on budget? So we just put these numbers out. We had our conference call yesterday, so they're very new numbers. This is as of October 27th. So far we are tracking to our budget and our timeline. So the previous timeline that we talked about is still intact, and the budget, again, we are still tracking to where we had projected. So we've consumed about, $315 million of the total budget so far. A lot of that obviously has been spent on the mine because the mine is further along and it will go into production sooner. But certainly in Shawinigan, as I said, we've ordered the long lead items. Our project economics, I'm not going to go through these, but just to say we have a $2.2 billion NPV on the project, and that's after tax. Here's where we are on a cost basis. Lithium hydroxide, we are projecting to be the lowest cost producer at $2,800. And here's where we are on carbonate. So still very competitive on the carbonate side. And then I did quickly wanted to touch on our exploration. So while we're not really doing much exploration at Nemaska now, we did buy 20% of an exploration company. It's called Vision Lithium, and they are working on exploring properties, lithium properties. Mostly they have one property in Quebec, actually 2 properties in Quebec. And so that's sort of our exploration upside for Nemaska. And that, I think, will conclude my presentation, our share structure. If you have any questions, we're here at the booth, and I'd be happy to talk to you.